From the morning reading, futures open lower. Stocks sell off following Chinese export data. Oil flags. Bull flags galore. Just 2 of 9 sectors moved higher on Tuesday. XLU, XLP, and XLK were the strongest sectors, while XLE was the weakest sector. Oil futures reversed Monday's gain and fell $1.65 to close at 36.33. Breadth weakened as decliners led advancers 3.09 to 1 on the New York Stock Exchange and 3.47 to 1 on the Nasdaq. Futures fell overnight after Chinese economic report indicated that exports fell 25% in February. The spiders opened $1.27 lower and sold off to $198.39, where buyers stepped in around 11 a.m. Eastern Time. The sell-off was on approximately 50% below average volume. Buyers were in control until about 2 p.m. Eastern Time when sellers took over and pushed Spider back to new lows for the day. Spiders, Diamonds, Qs, and IWM are forming bull flag patterns. Diamond was the strongest of the broad market ETFs on the strength of buying in Microsoft, Nike, McDonald's, Home Depot, and American Express. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:28 a.m. Central Time, and I'm recording this in preparation for the market day of March the 9th, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's go ahead and take a look at the morning report, and a bit of activity again last night. We were up in a pretty healthy respite on all 4 of the U.S. broad market indices. S&P futures at the time of this cut were up about 12 points, or a little over 0.5%. Russell futures are up about 2/3%. Nasdaq is up a little over 0.5%, as are the Dow futures. Crude oil's up sharply about 1.75%. Euro is down about 0.25%. Bonds are down about 2/3%, as is gold. And overseas action, China down about 1.33%. Hong Kong just below scratch. Japan up about 3/4. I'm about to say that wrong. Japan is down about 0.75%, and Germany is up about 1.33%. United Kingdom up about 0.5%. In terms of macroeconomic reports for today, you had the weekly version of the crude oil inventories and a 10-year bond auction. Looking forward to tomorrow, we had the weekly version of the employment claims and the natural gas storage report and a 30-year bond auction. And that looks to be about it. So fairly quiet week thus far for the macroeconomic reports. In terms of current volatility conditions, we did have the short-term VIX push up a little bit yesterday. It's now up over 19. Skew is benign. The IV percentile for the S&P moved up a little bit, but is still very, very low at a 28. The Russell 32, the Nasdaq 32, and the Dow at a 25. We did have some negative standard deviation moves yesterday. You'll note the S&P was down about 1 standard deviation move in a close-to-close basis, and the Russell was down about 2 standard deviation moves. So after being on a tear for 4 of the last 5 trading sessions, Russell gave back some yesterday for the first time in over 3 weeks, a significant down move in the Russell. In terms of the current charts, these are the futures for the S&P, and you see the overnight activity pretty much held where the low of the prior day was. And right now we've got a little bit of a bullish retracement from yesterday's action. This is going to be the interesting thing to watch here, is where does this swing low form? Is this a bull flag, or does this become a lower low? And we're going to be watching that to see just where this intermediate trend starts to point us. In terms of other futures, the Russell, of course, had the most significant action yesterday after this just amazing historic run from the 936 area all the way up to almost 1100. We finally had a day where we had a close that was lower than the price action of the day before. Again, we're going to be watching to see just where support comes in, where that swing comes in, watching all four of these indices for some indication as to whether this is going to be a continuation pattern from a bull flag or a breakdown. The Nasdaq, of course, has been retracing for a number of days, and a little bit more pronounced yesterday, but still relatively mild action, and this could still be considered absolutely a bull flag pattern. Nothing yet to invalidate the expectation that this is just a mild pullback and a continuation pattern. And the Dow futures, it's been the strongest of late in a relative sense, and of course that's the most defensive of the four indices, with a whole bunch of large cap dividend paying holdings. Volatility, what's that telling us? Well, volatility did have a reversal pattern the last several days, so we'll be watching where that goes as well. So far, everything is just kind of fitting very nicely into the expected patterns, but we're still needing a little bit more information to kind of give us some indication as where the intermediate term is going. Here's bonds, and just pretty much in a sideways consolidation pattern on the bonds. Off we go to the daily report. And in terms of this upper section, market trend intermediate term phase opinion, still phase 4, price patterns in a bullish phase, near horizontal resistance. We're looking to see this kind of combination of these price patterns near horizontal resistance, bull flags, etc., until proven otherwise. So that's a nice positive sign. Portfolio investor posture, the first signal from IBD, confirmed uptrend. Also looking at the current accumulation distribution, Nasdaq is relatively poor, D+, the S&P kind of an average C-. GMI index, another mechanical signal, is at a 4 out of 6 with a buy signal in place since 3-2. One of the things we're certainly watching is this decision point scoreboard status, and we're wanting to see when we start to see some evidence of a stack. And we got, with the Dow yesterday, a green on the intermediate term. We're going to need to see a series of these neutral and negative signals on the intermediate term turn green, and that will happen if indeed these current retracements turn into bull flags and we set new higher lows and then a higher high in this current pattern. That will start to see this bleed over and start to see this stack form with the times frames aligning. Right now, consensus between these mechanical signals is that we are a market in transition, and really hard to point out as to what the probabilities are, whether this is just a short-term bounce within a bear market, or if this is something that's going to lead into more of a bull intermediate trend. It's very, very mixed on the signals here right now. In terms of position sizing opinions, fairly good agreement here, 100% on the one system and 75% on the active trader volatility-based system. In terms of intermediate term market posture, we're still, even with yesterday's bit of weakness, very strongly bullish, with a weak bullish sentiment line supporting that. And you see all the indices have very, very high ratings. This will not change its status until this number drops below an 80. In terms of the strength of the current trend, it's a weak but improving trend. Hedge warning status remains at 0+, so normal with some elevated risk levels. And amongst those elevated risk levels certainly is an elevated volatility condition. And indeed, in terms of our special opinions, the option income strategies, the VIX is borderline acceptable. So that means we can initiate new positions for novice traders in the option income strategies, but consider reduced position. You're likely to have larger than normal delta and vega moves. Adjustments are likely to come more frequent in these kinds of conditions. Cover call strategies and put selling, no changes here from yesterday. Still relatively defensive. We've got a And our two key ratios for covered calls, a 3-to-1 ratio opinion in terms of our strike selection, 3 in the money for every 1 out of the money. And then with the beta ratio, a 1 low beta position for every 0 high beta position. So you can see we're still very, very defensive here. Also consider legging into covered calls with conservative setups with well out of the money put selling. Consider the position size and keep it in the scale you're willing to own should you become assigned those shares. In terms of special warning areas, we do have market in decline and sharp increase warning present. VIX futures up over 18. Actually, the skew is below 125, so that's benign. Week out expected move is just below 50, so nothing particularly exciting about that. New highs, new lows yesterday was fairly neutral. We still have all 5 key intermarket risk aversion indicators as risk on. Sentiment indicators have gone for stocks to be a relatively average setting, so that weakness yesterday did kind of scrub off some of that excess on the sentiment. Gold is a bit high, so that's one to start looking for potential reversal patterns. In terms of the fear and greed index, it's about the same as yesterday, up at a 70, so a bit extended, but certainly not extreme. In terms of industry or sectors that are in very high sentiment, these you want to keep an eye on potential reversal patterns. And then in terms of decision point market postures that are intermediate term bullish, we've got a pretty good collection going here. You got the spiders, gold, long bonds, you've got the Dow's now joined, mid caps, small caps, consumer staples, consumer discretionary, industrials, materials, technology, utilities. What a mix there. So this has really changed in the last week. And you see the dates here of when these signals came on. And we've had a lot of additions that have taken this from a defense-only oriented mix into a much broader mix of sectors and industry groups. I guess this is mostly sectors here, so there you go. In terms of sector-specific performance over multiple time frames, you can see here short is pretty good shape all the way along, intermediate as well as long. Really, healthcare is the one that's probably the ugliest, and that's that biotech group that's just been so much the target of the politics of late. In terms of percent change, you see the 3 that were up yesterday, telecom, just barely above scratch, and then consumer staples and utilities. So in a weekday, again, money holding up in the defensive sectors the best. And I think that's enough for today. So let's see, what do we want to talk about today over here? Well, hey, you know, obviously you could see how all of this is modeled in live trading by becoming a member of the Portfolio and Options membership. It's a very, very cost-effective membership. It's only $50 a month. It's a live chat trading room. And of course, there's a whole host of other resources that are also in support of the members. They get daily price guides. They get additional reports that you don't see here on the YouTube video, including a monthly business cycle review. So a number of resources that come to them. And then, of course, they get to see trades actually modeled across 3 different core portfolio strategies: swing trades, option income trades, put selling, all different kinds of things. We certainly model covered calls. We use in our Falcon trading plan for the covered call mastery course in that room. So a lot of different things going on in that room, all for $50 a month. If you'd like more details, just go to the website here and that'll give you more information. Would love to have you in the room. Disclaimers as always, hit the pause button if you need more time to review, and you see the hyperlink at the bottom for the full set of disclosures. We'll see you back here tomorrow morning for the Falcon Global Market Preview. Good trading.